Hey, thanks for joining me. It is Monday and it's about 25 past 5 in the morning in the UK. So I'm up early every morning, just part of my routine. But for the analysis for Monday morning, I do it over the weekend. So I've got my time. I can really go in depth. I can look at weekly charts, monthly charts, really get an idea of what's going on in the market. I cover about 24 different markets. So by the time I've done all that, I've got a pretty good idea of what I think are the lowest risk trades for the day. And what I do is I put them into a spreadsheet for my subscribers here. So it just makes it easy for them. They've got a quick reference. Um, uh, and it's also very handy for me, of course, because I have to put the orders into my trading platform as well. So rather than read through all my analysis, I just do this. So here's my spreadsheet, very simple. This is where I'm going to sell. This is where I'm going to buy. This is my stop level for my sell orders, my stop level for my buy orders. Then I've got my targets, and then just a little comment, mainly for my subscribers there. So what I then want to do is I have a look at which orders are near, or which orders I might be able to execute today. So we'll start with the gold at the top. My gold order is in here. Now, I don't know the exact price point at which the market might reverse from, obviously. And like every trader, I do miss a trade by a fraction. So what I try and do is put the orders in across a little bit of a range, just to make sure I try and get at least one of the orders executed, hopefully both, but you never know. So gold at the moment is trading at 1848. I've got my sell order at 1852 and 1854, which is around, it's actually just below my sell level of 1854, 1856, but we've been down as low as 1838 today. So I'll be very happy if I can get any short sell orders off in the low 1850 area. My stop is above 1858. Well, I've put in 1858 actually, as you can see there. Okay, so I'm waiting for the gold order to trade. I'm not far off it, 4 points. So hopefully I should sell something today if we can have a little bit of a squeeze higher this morning. WTI crude, my first sell level is at 76.80, 77.10, and we're actually there right now. So we've been up as high as, where's my high low? I need a high low, there we go. We've been up as high as 76.93. I got up just after that happened. So I managed to sell a tiny bit of oil, but I will sell a little bit more if we get up to 76.95. So we're about 20 pips away at the moment, as you can see. So basically what I'm trying to do is I've got a £2,000 account. This is a little test for me. I've just put the £2,000 in. I'm figuring this is maybe the average kind of size for a retail trader, especially someone who's starting out, maybe someone who's traded a demo account for a while and is ready to step up with some real money. So I thought I'd do something for you guys on YouTube and start trading a £2,000 account, show you how I would do it with my trade sheet back up there, and show you the kind of size that I will trade for a £2,000 account, the kind of risk I will take, how I'll input my orders, that kind of thing. So I want to risk around 1% of my trading account per trade. So I've got £2,000 in the account. I want to risk about £20 per trade. Doesn't sound like a lot of money, but I think I've got something like 13 orders in here, 13 different markets. So if they were all to execute and they were all to lose money, I would lose £260, which is a large chunk of a £2,000 account, way more than I would want to lose in a day, about 13%. But at least with 13 different orders, if they all went wrong, I could still live to fight another day. If I was risking more than that and I'm starting to lose 500, 600, 700 pounds, it won't be long before that £2,000 is wiped out in 2 or 3 days. So as I say, even losing £260 in a day would be pretty bad for this account, but that would have to mean that every single order went wrong, and obviously I'm not expecting that. I'm hoping at least half of them go right. Where am I now? WTI crude, this is my first sell level. If we were to get up through there and I got stopped at 77.50, then I would then be looking to sell up at 78.10, 78.30, but we'll worry about that if it happens. Okay, so the next order I've put in is the Aussie dollar. Here's my Aussie dollar order, 72.80, 72.90 is where I want to sell. So I've got it in at 72.80. Now, I haven't put a second order in. The reason being, if I was to put 2-3 orders in for every single trade that I have on my trade sheet, I'm going to be here for 3/4 of an hour. I can't be bothered to do that. So I'm being lazy. So I will put my first order in at 72.80. that gets executed, obviously I'm going to be aware of that. Then I'll put another order in at 72.90 with a stop at 73.10, which is what I've got here. And then I'll have at least 2 orders on. And that should give me exposure of about 1%, risking about £20. And if the trade goes right, well, where's my target price? My target price for this one is 72.30. So for this particular trade, I'm risking 30 pips. I'm going to try and make 50 pips. That risk reward ratio works for me. Now, if I'm lucky enough to sell another amount at 72.90, my trade risk will drop, because the second trade will only have a 20 pip risk. So my trade risk will drop to 25 pips if I can execute both of those trades. And of course, the potential profit will then jump to 55 pips. So I will be risking 25 pips to make 55 pips. That is more than, I'm going to hopefully make more than double than I am risking. So that's what I will do. I will wait and see if the order gets hit at 72.80. If it does, I'll input a sell order at 72.90 and hope that also gets hit. And then obviously I hope the market turns around and goes down. Okay, Aussie dollar, I also have a buy at 72.20. I think that's probably going to be the low for the day. So I put in a buy order at 72.20. My stop is at 71.80. So I've got a potential 40 pip loss on that. But I have a 55 potential pip profit on a winner. Now, if we go down to 72.10, let's say, I will also try and buy at 72.10, which will decrease my risk to, instead of 40 pips, it'll take my risk down to 35 pips. And then I will have a potential profit of not just 55 pips, but it'll be 60 pips. So my risk will significantly go in my favor, in the favor of the profit, of course. We'll then be risking 35 pips to try to make a 60 pip profit. Okay, hopefully you get the picture now. Again, New Zealand dollar, I've got a sell order in there because I think that 70.25, 70.35 could be the high for the day, or certainly could be a good sell level. So I've got a sell limit order in at 70.25. Where's the market trading as I speak to you now? Market's trading, okay, just below 70.00. So I'm about 25, 30 pips away from that one. Again, if I can sell at 70.25, I have a stop at 70.55. That's a 30 pip stop. I haven't put my target in yet. If that trade gets executed, I will then put a sell order in at 70.35 with a stop at 70.55. So I will have a 25 pip potential loss. And I'm actually looking at a target of, well, 69.40 would be my lowest target. Actually, if I went for the mid-range target of 69.65, that would be a what? That would be a 95 pip potential profit, and I would only be risking 25 pips. So that looks like a reasonable target, actually. I give multiple targets for my subscribers because some subscribers might be really happy when we hit the first target. They're happy to get out of the position, take the profit, and then maybe even give themselves the opportunity to enter the trade again if the market returns to the trade entry price, and that happens often. So I kind of leave it up to the trader a little bit to try and decide what to do. But this is how I would execute the trade. So I will actually go into my New Zealand order, and I'm going to put in my take profit at 69.65. There we go. Modify the order. Now I have my target price already set. So I need to do that with a couple of the other orders here. I've missed out putting my target price in the euro yen. I'm going to put that in at 128.60. So this would give me a potential loss of 30 pips, but a potential profit of 100 pips. There we go. With this euro yen trade, I actually do need to, I'll enter another order if that's it, 129.30, that's bang in the middle of my range. I'll put another sell order in at 129.40, which will take my risk down to less than 25 pips. And obviously, if I win, then I could make up to 100 pips profit. So that's a 4-to-1 risk reward ratio. That obviously would be fabulous if I could get that trade off. Okay, so you get the picture. I've got more trades on here. Canadian dollar versus Japanese yen, euro versus the US dollar. I've actually bought that already. We're down at my support level, so I bought it. I've got a very low risk trade on here. I've paid 112.74, call it. My stop loss is at 112.50. So I've got less than 24 pips risk. We're just hovering around where I got in. I actually would like to, I need to buy another one because my risk is too small on this one. So I'll do that in a minute. What else can I tell you? I've got a trade on the Euro GBP. So these are all very, very, they're not doing anything. They've just entered the orders and they're not doing anything. But if I lose on these three, then I will lose maximum of £60. No big deal. Okay, well, I'll keep you updated on this. We'll see how we get on during the day, and you can see how my levels work.